And we're back. How are you guys doing out there? It's your Uncle Bruce here. They call me Uncle Bruce. I'm back for the last hour of the day and a little bit of after market trading. How are you guys doing out there? Welcome to Stock Markets with Bruce. Bruce here from beautiful Creston, British Columbia, and a little bit of after market trading. Putting on the mute button so I don't hear myself twice. How's it going out there? Are you making any money today? What's going on in the markets? There's been a bit of news today, a few developments here and there. Always things going on, never a dull moment, of course. A number of you have been talking to each other before the show even started. Fantastic. Thank you for joining me. I'm on twice more today. I'll be live yet again, twice more, tonight at 7 o'clock Eastern for Stock Markets with Bruce for my sponsor members. If you want to become a sponsor member, head over to TWB and join up there. And then 8 o'clock, anyone can watch me live at 8 o'clock on Traveling with Bruce with yours truly, with my Traveling with Bruce gang over there. You're more than welcome. Any of you out here who want to hang out with me tonight, 8 o'clock, you got nothing better to do? You're bored? You need more Uncle Bruce? Join me over there, Traveling with Bruce, 8 o'clock tonight, Eastern time. And hang out with the gang over there. Great fans, great viewers. And I would love to have you come on by. Welcome back. We're going to follow what's going on here with the markets as we shutter down for Monday, February the 8th, and just see where it kind of takes us. Been watching all day the trials and tribulations of our friends, various stocks that we're following, and the markets in general. See if I can get my system to work properly here. My big ass iPad wants to be finicky right now. Here we go. There we go. GameStop. Let's see where we're doing. We're 58.95 on the big old GameStop, down 482 a share. She's traded 23 million today. A definite drop in volume. No question. The days of panic selling are over. There are no more dump offs coming out. We're kind of getting more into a normal kind of a pattern here. I get a kick out of some of these people out there who make these blogs and postings. They talk about, oh, did you make a bundle of money on GameStop? Oh, get ready for taxes. I'm thinking, so what? Give me $1 million tax bill. You know how much money I made if I have to pay $1 million in tax? I don't care. Yeah, I mean, such problems. I'll hire a professional to help me, defer taxes or whatever I got to do to make it less painful. But yeah, I'd rather have the multi-million-dollar problem that I've got a tax issue because I made all kinds of money in GameStop or any other stock out there. Would you rather be in that position? Who needs the, I don't have to pay any taxes because I didn't make any money. You want that? I mean, what is that? These comments that are being made by some of these guys, you just kind of, maybe it's just because I'm an old man and it affects me. If I were a young guy at age 23, I wouldn't get riled up with a comment like that or posting like that. I don't know. It's just me. A couple other stocks we're following today. We're following a company that I talked about this morning for the first time, and it's called Gores Holdings. GVHI is the symbol, GHVI, Gores Holdings. This is a company that is a SPAC. It's trading at $13.04, up 78 cents today. And this particular company has made an announcement that they are merging their SPAC with a private company called Matterport. And I don't know if many of you watch Saturday Night Live on Saturdays, but this past Saturday night, they had one of these digital shorts. They put a little digital pretend commercial together, and it was showing off all of these millennials surfing the internet, and the narrator was talking about how sex isn't important anymore as it used to be. Now that we're into our 30s, what really turns us on now is going on the internet and going to sites to look at people's houses for sale, and being able to tour through the bedrooms and get these virtual reality presentations of homes for sale. This is now the new porn for millennials reaching a certain age. Great commercial. Well, anyway, they're showing off all these, homes, beachfront homes and desert homes and, condos in San Francisco or wherever in the world. The bottom line is, if you're into real estate at all and you go to Zillow, for example, and you go to a realtor's website and you want to look at homes for sale in Scottsdale, Arizona, or Beverly Hills, California, or anywhere in Dallas and Houston, whatever, if the realtor is any good at all, the realty company that is listing your home for you now, they will design and put together a video of your home to present it as a video presentation, because a lot of people are doing open houses online. They can't get out because of the virus. And the more professional the presentation of the property, the better a chance it might sell. Well, Matterport, this is what they are all about. They have created, they're a 3D imaging company that does virtual tours for hotels, hotel properties, resort properties, cruise ships, home renovations, new home sales. And for those folks out there who are, thinking about getting insurance on personal property in your home, you'll use this service. You will use your phone. You can do this yourself with their app. You get their app and you can use your phone as the camera, and you can walk around your home and show off your valuables in a video composition that will then be sent to your insurance company for coverage of your personal goods. But I can see if I wanted to sell my house, I would have a camera person with a camera coming in. It could be a higher end camera, 3D type camera, or just a nice high quality imaging camera using the Matterport software system to present the house and walk through the bedrooms and the hallway and the living room and the kitchen, all that stuff, to better present the house online. This is the company that's being merged into the SPAC, which is GVHI, Gores Holdings 6 Inc. When it's all said and done, the company will be $2.9 billion on the open market. The Gores SPAC, which is trading at $13.09 right now, that company has cash in the bank. The two companies together are a sponsored financing is being done on top of this for another $295 million. And when the two are merged together as one stock, so the company will have $640 million cash in its treasury to allow it to develop out even further and expand their offerings with other partners. And I can see the day where within a year or two, you cannot, I think you'll have a tough time selling a house unless you have a high quality 3D or 2D virtual presentation video with every listing. I mean, the day will come. You can't get away anymore with just a photo from the sidewalk and a photo of the front door. And then inside you have a photo from the living room and a photo from the kitchen and a couple bedroom, 20 photos. That's how you sell a house. No, that was cutting edge technology 10, 15 years ago. Now it's got to be moving video with music in the background, maybe a narration. You got to make it slick, baby. Sell me on the house. You present to me something that really gets me excited as a potential owner, and then you have a better shot at selling the house. And this is the future. I think this outfit's going to do very well as it is, but as a public company, I think the deal could be a very good deal. Anyway, that came out this morning. That announcement was made this morning, and I've been following this GHVI stock today. I'll follow it going forward. It's the next 3 months, this deal should close. The merger should be done. Over on another SPAC I'm following, Virgin Group Acquisition Corp, VGAC. They announced on Thursday a merger with their SPAC and 23andMe, the private company that runs bio technology, where you mail in samples for what's the word I'm looking for? To measure for your ancestry or genome stuff. Very interesting company, founded in 2006 by genetic saliva testing. Excuse me. There we go. It's going to be a $3.9 billion company. It's run by Ann Wojcicki, and this company has been funded by Google and with GlaxoSmithKline. They put in $300 million. A number of other entities have put money in. This company will be listed with $950 million cash in the bank, and it will also be closing. Richard Branson is the gentleman that created the SPAC with his team, the Virgin Group Acquisition Corp. They founded it. They funded it with a bunch of dough, and now they're merging with 23andMe, and that'll be a $3.5 billion public company with the merged assets, and $950 million of that will be cash. So that deal is down 53 cents at $15.51, and I'm happy because I mentioned this deal last Thursday morning. When I heard about it, it popped to $18.50 a share. The hope was that the stock would settle down a little after a couple of days of the news being out, and that you might get a shot at getting in here between 14 and 15.50 a share. It's starting to enter that range right now, and there might be an opportunity to scoop some of this up in the next 2 to 3 months. That deal will be done, listed on the New York Stock Exchange, and I think it will do very well. And you've got the ultimate global promoter, Richard Branson, who's going to be promoting this brand going forward. He's part of it. He's got a bunch of stock in it. So I think you're going to hear a lot about this company down the line. GameStop, 58.78, down 4.99. AMC is just not having a good day today. It's just it's been flatlining now for the last several hours. It's at 6.07, down 67 cents, low of 5.75 today. We'll have to see how this plays out. There's a Reuters story out that China's Wanda, an entity that has a bunch of stock, a major shareholder in AMC, they've conducted a share conversion, it says, of their stock, and this would allow them theoretically, they've converted their Class B common stock into Class A common shares in order to permit sales of its common stock. So this would allow them, if they wanted to, sell stock into the market. They haven't sold any yet. They haven't done anything yet. The stock hit $17.25 on February the 1st after quadrupling from a week earlier. And the question is, will the shares stay low now with the possibility that this group might want to trim their exposure in the company? We'll have to see where that plays out. So that's overhanging at AMC today, and the shares are down 77 cents to 6.06. Bed Bath & Beyond down 34 cents to 26.20. It's been kind of flat and down a tad all day long. BlackBerry still up at up 31 cents today at 13.54. So it's holding a gain this point. The Dow up 159. We're coming in here to the last 48 minutes. Dow's up 160, S&P up about 18, NASDAQ up 84. And Bitcoin, the big news with Tesla today is that Tesla, the corporation, bought $1.5 billion of Bitcoin back in January of this year. That popped the Bitcoin value by over $5,000 this morning. It's still at $4,500 right now. The Bitcoin quote is roughly at 43,198. Tesla, my hunch is that they might be up a third on their investment, and they're up like $500 million on their investment in this stuff. They're going to allow people to buy cars using cash or Bitcoin, and you can buy services using Bitcoin. You can buy parts. You can whatever. So interesting how the company is moving way into the digital side this direction. You kind of wonder if other companies will follow suit, like GameStop or others. We'll see what's going on. We're Zach here. Thanks, Zach. What do you believe will be AMC's price target or range post-pandemic, 6 to 12 months out? Boy, that's a good question. Question of when can AMC open up their theaters, perhaps at half capacity or 60% capacity or regular capacity again. A hot opening from Hollywood. Will AMC be allowed to sell out the house? Would everyone have to wear a mask, and would that be good enough? What's the vaccination rollout like down the road? It's a ways yet away from everyone, including, of course, theater chain like AMC. But the sooner they can get going, the sooner they can have cash flow flowing again. But unfortunately for AMC, this is down the road, ways down the road, and we're not gonna know yet for sure. By the way, Tesla's up 11.41 on the day, even though Tesla had an announcement this morning talking about issued product control issues in China was the first story that broke on Tesla. The shares are down about $8-10 a share. Then the Bitcoin filing came out, and that changed everything all day long. But AMC, will they reach $8 to $10 and stabilize once they start opening their theaters again? And with cash flow coming in, will they reach that 10, 12 range again? Will people get all excited, investors, and just pile into the stock? There's a ton of stock out there for AMC that would have to be picked up to really move the market. AMC is not a thinly held little company out there. We're talking about 287 million shares in existence. And that's going to take quite a bit of movement to really have something happen. But we'll see what's going on. Like I say, they tumbled today because a large investor of the company has shifted from Class A to Class B, probably improving and increasing the size of the float, the free trading float, and that spells bad news for the stock's rarity. It tells me that there's a lot of paper out there, and that could make for a bit of a tough going for a while on AMC. Let's take a look here. Back to GameStop for a second. Volume now is approaching 23 million shares today. No actual announcement being made out there. Nothing by the company today. We'll see if they make any announcements this week. I know that as each week goes by, we're getting closer to hearing their latest financial results. We'll find out kind of where they're at, where that's at. I'm very curious to see how their in-store sales are doing versus a year ago. I'm waiting to hear about their margins, and of course, they will continue to talk to us about converting the company from brick and mortar location selling to being an online e-commerce company. That's really where they're going for. Okay, alrighty. What else is going on here? Let's see. We got a few folks commenting on a whole bunch of things here. Tom, I have 3 limit buy orders open on GameStop, 58, 55, and 50. So if the stock comes to you, you'll get it. That's a good strategy, very good strategy. If you're thinking of being a buyer of GameStop, but you don't want to, it's like catching a falling knife. If it's going to drop, you want to get it as low as possible, but to pick the exact low, hard to do. But if you have a guess that, in this range here, it's down $5 today. Will it drop a couple of more and then bounce back up? You might put in a limit buy order at 58.10, 58.01, 58.05, maybe a buy order in there at 57.10, 57.11, a little higher than the nice round number of 57 or 58 or anything like that. You might put a buy order at 56, 12 for a little more. It all depends how much you want to get. I mean, if you're trying to buy 10 at a time or 20 at a time or 100 at a time or 1,000 at a time, you'll average down every time you get more stock. If it happens, if there might be a swing where 50,000 shares comes in for sale in a hurry, somebody wants out, and it moves the market down $3, but then it comes back 2.5. And if you wait for the moment and then to hit the button to buy, you miss the trade. Where here with a limit order, you pick your spot. Say, well, I'm prepared to buy some at 58.10. I'll buy some at 57.12. I'll buy, if it comes down to 56, I'll get it. I'll pay 56.13. Hit those bids. I dare you to sell enough stock. But you might catch it at 56, 57, but you might not get the 56 buy because it doesn't go that far, or you did and it went to 55, 58, and then popped back to 59, 50 towards the end of the day, and there you're going, hey, I got my 3 buys in. Thank you very much, and I'm already up on all 3 of them. Thanks a lot, and I'm helping to reduce my average cost. These are strategies that traders with long-term objectives, they'll employ those. Same thing with these 2 SPACs. If you want to buy the Virgin Group Acquisition Company, you put in a bid at 15.01. It's at 15.63 right now. Maybe a limit order that's good until tomorrow's close. You're in there at maybe 14.12 or 13 or 14.52, and maybe these shares will reach these levels just temporarily, just briefly. It'll touch it. You get a fill, and then it'll bounce back. I don't know what the low can be, but that's how you do it. On the sell side, you do the same thing. If you want to sell something that you're up on, you've done well on something, let's say you're buying GameStop and you're trying to get it in the low 58 range and you want to sell it at the high $59, $60 range on just a flip. You're buying in at 58.10 and you're getting out at 59.92 or 94. You're just underneath the $60 number, and you're a little wave up and you're out, a little wave down, you're in, a little wave up, you're out. You set your limits that way to try to catch waves as well. Anyway, there you have it. Tim Olson, hi Bruce, thanks for a great channel. You enrich my life by sharing important and life-changing knowledge. On that, you have a very wonderful charisma. Keep that up and keep what you're doing. Tim from Sweden. Thank you very much, Tim from Sweden. Appreciate your comment today, and thank you for joining the channel and the gang here. I really like that. Carp Donnelly, is GameStop anything more than a long-term hold, depending on your sunk cost or swing dial? Well, it's not going to go to 500 a share in an hour. It's not going to do it. Not good. Not going to happen. There could be events in the technical side of the trading, but taking a look at the Reddit phenomena that we were watching the last 2 weeks, that's kind of calming itself down. It's pretty evident across the board that this has calmed down. Notice how AMC is not reacting now. Neither is Bed Bath & Beyond or BlackBerry. None of these shares are ready, indicating any kind of a surge on the horizon. But on GameStop, there is evidence and has been evidence that there's a large short position on the stock. There has been one for a long time. Now the question is exactly where is it? We will get updated short information probably tomorrow. I think it's tomorrow. And then we'll see just where the stock ended up at the end of January through the midst of this craziness. But right now, today, there are more sellers than buyers. It's down $5 a share. I mean, let's face it, it's down $5.04. Does that mean it's going to go to $55 this afternoon guaranteed? No. Does it mean it's going to go to $65 this afternoon guaranteed? No. It's going to trade. Now, it might go either direction at any time, but as I see it at the moment, I don't hear any rumblings or any street rumors going on that there's a massive buyer accumulating stock and it's about to be disclosed that XYZ company or a certain person has bought a whack of paper and is tightening up the hold of the stock. I can't tell you that because it's just a trading stock. The volume is telling me definitely that it's getting quieter. I mean, the volume is the big tip off. 23.5 million traded today. That's a sign that the company's the following might be there, but the volume today is not. And since about 11 this morning Eastern time until now, it has been between 58 and maybe 62. Mostly 58 to 60 at best is where it's been all afternoon since this morning's sort of start, and then a bit of a drop off until 10 a.m. and then it's kind of flatlined more or less since that. So that's where it's at today. So today it's not showing much of anything. What will it do overnight tomorrow morning? Stay tuned, because again, in this market, you never know. This kind of stocks, GameStop, there's still only 50 million shares free trading. That's really small in the world of the markets. I mentioned this morning about how many new accounts are being opened up for the last couple of years, especially these platform trading accounts, tons of them, up 17% in 2018 to 19 to 20. Shares per day that trade on the markets has gone from 7 to 8 billion shares a day average from a year ago to now 15 billion shares a day. That's how much turnover we have in the markets overall. That's double the number of shares trading hands, and we're at record numbers on our indexes. The Dow, the S&P, and the NASDAQ are all near or at their all-time ever record highs. With 15 billion shares turnover at all-time record highs, the amount of money that's floating around in the markets is in the trillions. It's just beyond trillions. It is huge. And so at any time, if any kind of a corporate announcement comes out on GameStop, they hire a couple more senior people away from Amazon and disclose it, or people from Chewy, or people from other entities that of note. GameStop could have a 3 million share pop in an hour. It could absolutely happen. A 3 million share buying wave on GameStop in an hour of true buying. I'm not talking about flipping and just shorters flipping stock. I'm talking about a buy wave coming in where people are going, I'm buying this stuff because these guys are really going digital. That could move the market 20, 30 bucks in 10 minutes, 30 minutes easily. And then it won't come back very quickly, because if those 3 million shares of buying are coming in to buy and hold because of the future, that stock can't day trade anymore. You've got to day trade the rest of it. And you start tightening up with that kind of a buy wave. This thing launches. And once momentum starts, you've seen what happened in the past. You see momentum beginning, it can really just keep on going. Anyway, that's just me giving you some technical thing. Killian, not much, but I try to give $5 every day. Least I can do for your time. Please help us even after the GameStop saga. That said, Killian, thank you very much for these donations. All of you who've been making donations to my channel, all of you, thank you very, very much. We'll keep you posted on what's going on. We'll try to stay on top of these stories. Much fun from Tennessee. Caleb McGinnis, hi. Thank you for this donation. Bruce, when is the proposed merger happening for GHVI, the Gores Holdings? I know you said a couple of months for VGAC. You're my favorite uncle. Well, your Uncle Bruce is saying, I heard this morning that the Gores Holding and the Matterport merger is scheduled to close within the next 60 to 90 days. That's usually how long these take. 2 to 3 months typically is what it takes. You have to have audited financial statements for both entities, and then the full entity in effect. So you got to bring the auditor in from this company. You bring the auditing team in from this company. You have your new auditor, whoever that is, and they merge the books so that the day the company lists that they're going, they're now becoming one machine. The books are synced and it's all figured out. The shares are all merged together. The shareholders are all identified. The insiders are all identified for both. We're talking about one public company now and one private company now that have to be put together. And that now has to be a full-blown publicly disclosed traded company. So there's a lot of securities laws, a lot of accounting things that have to be worked out. You have to, of course, close the placement of the financing that they're doing. Both of these two deals, the one for the Virgin company and the one here now for Gore, they are doing an additional of private placement of cash. It's hundreds of millions of bucks, 200 to 300 million for each one of these roughly. That has to be coordinated with the brokerage firms, and the shares have to be registered and for the new company, and all of that has to be figured out. So we're talking about a lot of work for bean counters, securities lawyers, auditors. There's a whole lot of millions of dollars being spent here by these entities to do what they're doing. The New York Exchange has their rules for disclosure. The SEC has their rules for disclosure. And then there are all the lawyers on the sidelines who are waiting to enact a class action lawsuit if you make a mistake. I mean, it's a litigious world in which we live. And these deals will be, the T's will be crossed, the I's will be dotted. And if it takes 68 days or 77 days, or 84 days, who cares? They're going to get it done right the first and only time, and they're going to bring it to market, and then off we go. So this new one, this Gore deal, GHVI, like the other one, will be in the second quarter of this year. So that's somewhere between March 1 and the end of May, but I'm thinking March to April, somewhere, like I say, in the next couple of months. We're now into April, early February here. Add 60 to 90 days, and you're well into the second quarter. And yeah, look for the deal to close, and then press ahead. That's coming. So that's where I'm going. All right. Anyway, there you have it. Not financial advice, just my opinion. Megan, I'm at work here. Have a bowl for me. Someone's saying. Oh man. Let's see here. Richard B. Agreement auditors prove financial info for each other's company external use. CVM ready to rocket a little more before close. Told you, look at her creep up on the volume. Devil's Reaper says we hold. Stock markets with Bruce. If GameStop is short at 80% or more, is there any way the shorts can fabricate the short number tomorrow? I don't think so. Again, it's tomorrow's number. If it comes out tomorrow, as I think it will, I'm not guaranteeing it, but I think it will. We will have a snapshot, boom, of the Friday night short position, January the 29th. That was the Friday, because Saturday was the 30th, Sunday was the 31st, and last Monday was the 1st of February. And so that will be for the end of January. That will be the one posted. And a lot of people will kind of bounce off of that. But the daily numbers shift all the time because of all kinds of shorting going on and covering going on. We're dealing with an active market. This is a stock that trades freely and trades relatively heavily, although lately it started to back off because the hype from the Wall Street bets phenomenon has eased up dramatically. And here we are settling in for the longer haul. But we'll follow this for you as best we can. The Dow up 177, S&P up 18, NASDAQ ahead by 85 points. Ben Dunn says $61 GameStop. I got 61 shares at GameStop at 317 average. I'm holding. There you go. Let's see here. What are your thoughts, Mark saying? What are your thoughts on buying value stocks in active markets? There's nothing wrong with always buying value stocks, except for the fact that you might buy a value stock like, let's say you're buying a bank stock. For the last, 3-4 years now, a lot of the bank stocks, which, make money and they're solid as can be, they're just not getting a lot of action on the market. They're just not the market darlings that the FANG stocks have been, for example, or the hot IPOs or short squeeze candidates have been. I mean, that's where the action is, right? But they do pay a dividend. They do, raise their dividends, and they just keep piling up more earnings. And over time, they outperform the inflation rate. They outperform interest rates that you could ever get from a GIC, like a guaranteed investment certificate or any kind of note you're going to make like that. But they can be, somewhat frustrating to get into. Buying something like an ETF, an exchange-traded fund that specializes in the financial markets, might be something a little more of a way to go to diversify your holding over a group of companies. But value investing is a tried and true long-term strategy that a lot of mutual funds use and have used for decades. And, it was, Mr. Templeton used to preach that theory that, look, you can try to catch the hot flyer of the week, win or lose, on one roll of the die, you win or lose money, or you can play the long game. And the long game is you buy into a value company or companies or mutual funds. You buy a series of mutual funds or ETFs here in this case nowadays, and you slowly but surely grow your holdings and let the dividends compound and just reinvest and grow out. It depends how much time have you got to devote to your stock holdings. Have you got 6.5 hours a day to watch your computer screen and just sit in front of there and fret about the minute-to-minute minutia movement of your stock, or are you a trader, or are you an investor? Oh, you have to ask that question for yourself. A lot of us out there, not myself anymore because I'm no longer holding a career job anywhere, but friends of mine and relatives of mine, they're busy with their careers, and they don't have time to watch the market second to second. They're busy. Their phone is ringing all the time. They got emails, they got text messages. They're making business. And so they want their investments to work for them, but they don't want to work for their investments. And so they're putting money into their accounts on a regular kind of installment basis, but they're into an investment strategy that's a long-term thing because they're in their 30s and 40s and 50s, and they just want to grow a pot of money over time so that as they come closer to retirement, they have assets with which to begin to use and utilize for retirement income. And let your money work for you is another old adage, and it's a way to go. I'll tell you a story while we're going here to the close. When I used to be the branch manager of a brokerage house, I became the branch manager of a firm that I used to work for. I had left the firm and then come back. I was wooed back to the firm, and they offered me the job as a manager. And I had a group of brokers there that I inherited. And as a new manager, you get what you get. Like a coach for an NFL team or a basketball team or baseball or hockey, you're the new coach. Here are your boys. Here they are. Now win. And you haven't had time yet to make changes. You're going to figure out who's the all-star in your group. You might have an idea who the best broker is and who isn't, or the best player is for your team. But eventually you start making changes, and teams begin to reflect the personality of the coach and the general manager and, all of that sort of stuff. Well, when I became branch manager of my brokerage, the brokerage firm that I ended up doing this for, I had a number of guys, and I looked around the room and I went, well, I got like 12 of these guys, and they were all men. It was 1984, 83. They were all guys. And that was the first thing I wanted to change, because I needed female brokers to go after female clients, because we were only going after a portion of the business. And I looked at my guys, and I had my day trader guys. I had my brokers who had the attention span of a gnat. You shined a little, flick the keychain in front of them, and they go, what do I buy? They had no attention span, and I knew that their futures were limited because they weren't holding clients in their book that were investors. They had clients in their book that were flippers. They were in today, out later today, or a quick buy and sell, the latest hot trade, that kind of thing. And then I had some brokers who were middle of the road, who needed some guidance as to what they should be doing to be better at what they're about. And they were into day trades and medium trades, and they had some longer and they were directionless. And then I started hiring newbies. And the newbies, the new brokers or potential brokers that I would hire, would be those who had the long-term outlook, like the mutual fund kind of mentality. Because I wanted stockbrokers that at the end of the day could go home and relax in the evening and not worry about their investments overnight. Because I saw my day trader brokers come in every morning, especially on Mondays. They were a wreck. And by Friday, they were complete wrecks, because they'd been out every night drinking with their promoter buddies and all their other clients, trying to find the latest hot story. And these guys are in their 30s. And they looked like they were in their 50s, because these guys were worn out to a frazzle, each with 150 to 300 clients. And they were experts, absolute perfect experts at making very little money. They made enough money to barely pay their rent and pay their bar bill. And they were hoping for the big score. That would be the bookmaker. They figured, I'm gonna load up on a stock with 100 of my clients, and that stock is going to go to the moon. And then I'm a broker with power, and I'll change my ways, and then I'll convince all my investors to become blue chip investors. Never happened. Never. They occasionally would have a winner, and these guys would piss it away within 2 weeks. The clients would take checks for 20 grand and buy themselves a used Corvette and be driving around having a great old time. These weren't long-term investors. They were never going to be long-term investors. The brokers, they would have a score and make a bunch of commissions for a while, and they blow it away, or they pay off all their bills that they were carrying, especially their credit card debt. So I had brokers, unfortunately, that made just enough money to live on, and were a nervous wreck most of the time. So these are the guys that I had to either convert into legitimate investment advisors, or I had to let them go, and they had to go to the firm. They had to go to other firms. And some of these guys, they realized that, the good times are over. This new manager, this guy Frommert, he's not going to allow me to play all these shenanigans. I'm going to have to move on. And they did the right thing. They started talking to other brokerage houses to see if they could find a job somewhere else. And then they would come into my office, and they would think that they're telling me really bad news. I'm leaving the firm. And I'd be, that's too bad. I wish you all the best. Inside, I'm going, yay, I got a troublemaker just walking out the door on his own. I don't have to fire this guy. This is fantastic. I'm going to sick loose my other brokers on this guy's book. And we're going to try to retain all the good clients and let the shysters walk out the door, and off you go, and good riddance to you guys. And what we used to do, in those days when I was branch manager, we used to have the weekly phone call from Toronto from the credit office. It was a conference call with the branch managers of each branch and the compliance officer of each branch, the credit officer. And we had to, this was after the close, and we would have to listen in to all the branches, go over their overdue books, the customers that owed the house money. They hadn't paid on time. And in those days, in the 80s, you had 5 days to settle a trade. 1 week settlement. So if you bought stock Monday, you had to pay for it by next Monday. If you sold stock today, we had a week to pay you. And so anybody was over the 5 day, that was the 5 to 10 day settlement. Then there was the 10 to 30 day, and then there were the guys who were 30 and over. And amongst all of that, we also had another thing to measure: under margined accounts. How many dollars do you have as a branch under margined? Because we would have accounts where the stocks that they held had gone down in value, and they owed more money than we could lend them officially. And these were upside down accounts. And I always found it fascinating to listen to the other managers, because I'm here in Calgary, Alberta, Western Canada, and they would start in the east, in Quebec, and then through Ontario, and then they would come over to us, and then we would go to Vancouver. And my compliance officer and I, we'd be sitting there, and we'd just be relaxed. We'd have our hands back behind our heads. We'd just be doing this, just stretching out, a nice long day. And we were waiting for our turn to report our situation. And what are you going to do about it was what the compliance officers in Toronto wanted to know. Where are you at? So they would start with Montreal, and there would be millions of dollars late in payment, over all the entire branch. And there would be millions of dollars of under-margined accounts. And they would be talking every week. I'd hear the same names, the same client names that they're chasing down, and they're chasing down, and they're trying to, they're suing the guy, and they're seizing their cars, and trying to find the other brokerage houses in town where they're hiding accounts. Oh yeah, all kinds of shenanigans going on. Then Toronto, millions and millions of problems all over the place. Then it would be Calgary's turn. And of course, admittedly, we were the small branch compared to Toronto and Montreal, but it would be our turn. And they'd say, the compliance officer would say, okay, how many accounts have you got that are late in paying, that are between 1 day late and 5 days late? So they're +5 to +10. And we say, we got 2. Okay, how many dollars is that? $4,800, and we'll take care of those guys tomorrow. Okay, well, how many accounts are you 10 days or over? Nothing. How about 30 days and over? Nobody. Okay, under margin. What's your under margin position for the branch? All your brokers, 25 brokers, all your accounts, everything. And I'd look at my guy with $1,500. We got one guy that's upside down, $1,500. We'll have him cleared up by tomorrow. Okay, that's Calgary. Let's move to Vancouver. And that's how I liked it. We kept a super clean house, tight control, and a lot of my hotshot brokers that wanted to get into the hot stock of the day, they hated me for it, because I prevented them from putting in orders for customers that really couldn't pay for the deal. All these customers wanted to do was buy today and sell later today and not bring in any money. They just wanted to get in at $1, get out $1.50, score a 50-cent gain, and not come up with any cash. And a week later, come in and expect a check for the gain, trying to flip stock on us. And I wouldn't allow it. We knew our troublemaker accounts. We knew our troublemaker brokers, but we eliminated them, and then we started eliminating the accounts. On the other side, I had these young guys, and I had some medium-aged guys, and then I had women coming in. And I was training them on being long-term investment advisors. And I was trying to bring them into a new world. And it was away from just buying stock and selling stock. I was introducing them to, why don't you sell mutual funds? Because now you're selling advisors who are managing millions of dollars and have a track record of reasonable performance. And all you're doing is representing funds. You're just the collector of cash, putting it into these pooled entities Diversify your customers from dividend mutual funds, capital growth outfits, foreign companies, bank mutual funds, whatever your customers are comfortable with. Figure out their tolerance level, get to know your customer, and now you'll get all their money. And I had my top flipper, the guy who was on the edge of always being fired, but he was kind of hanging around, and he would watch me talk to this new broker about converting him into a long-term guy, and he would just shake his head and go, Bruce doesn't know what he's talking about. What is he doing with this kid? Why don't you leave him alone? And the day came that my new broker came in the office, having gone to see a client in person. Those are the days where we would leave the office and go to your office and meet with you in your office. That's called service. Otherwise, we'd have you come into our office and we'd meet in the little boardroom or a little meeting room. But I sent him to the customer's office. I want you to go see this guy. He's a senior vice president of an oil and gas company here in town. The guy's making $200,000 a year in 1984. Why don't you go see him? And make sure before you go, you get your hair cut. You wear your best outfit. Don't come schlepping around in your cheap suit. Put on your good suit. Get your shoe shine, because a shoe shine says everything about who you are. And walk into his office at his level. Prove to this guy you are worthy of his investment money, and see what happens. And so he went in there. He had all of his notes and his presentation, and he met with this gentleman. The gentleman, they had a coffee and a wonderful meeting. And an hour later, he came back in the office and sat down. And I said, well, how did it go? He said, I've opened an account for him, and he's investing $50,000 into mutual funds. And he also wants me to handle his retirement account, his wife's account, his children's account, and he has a whole bunch of relatives. So I said, what do you think it's worth? I said, he says, $500,000 of assets I think I've just acquired. I said, not bad for an hour worth of work, huh? Getting your shoes shined, getting your hair cut, putting on a nice suit. Is that pretty good? Now, what are the commissions? The commissions were phenomenal on mutual funds. They were fantastic, because the mutual fund company would pay the brokerage firm, and then over a number of years, the customer would have no commissions to pay if they want to sell out 7 years later, 6 years later. There was a hold period for a number of years, no commissions. My flipping guy over here, he would consider himself a winner if he came back at lunch after having drinks with a customer, and he got a check for $5,000 to play the hottest stock on this gold deal or this latest oil deal. He thought a $5,000 new account was a win, because he was going to turn that over and turn it into $50,000. And here's this guy coming in with 1/10 the experience, but all the class, and with a good education as well. He was a good head on his shoulders, and he just scored a $500,000 portfolio in one meeting. And I said to this young guy, you get one of these a week, every year, 50 of these a year, and you will be a very wealthy stockbroker, and you won't ever have to work as hard and sweat like this guy does. And you don't have to have hangovers. You're not going to get hangovers with these customers, because they don't have time to go drinking with you. They're busy making money. That's the attitude of an investment professional versus a flipper. And so out there in market land, wherever you are in YouTube land, you've got to decide what is your intent for making money for yourself. Are you interested in one flip? I'm going to put $1,000 into this stock, and if it goes up 100 times, I'm a winner. Well, great. Who doesn't want to win the lottery? I mean, let's go to Vegas and pull the handle. You bet. But in reality, you got to build it $1 at a time, and you got to do your homework, and you've got to have your patience, and you've got to have the discipline to really be an investor. And so, if I'm boring you with these kinds of stories and strategies, you're a flipper. You're a trader. I get it. And there are all kinds of ways you can trade stock like crazy and take your chances. But in reality, the wealthiest among us are those that are probably the most patient and most consistent in their habits, whether it's habits at work, habits with relationships, habits with spending patterns, whatever it might be. And as I've said before, on a lot of the stocks that you buy, you make your money when you buy. You don't make your money when you sell. If you buy right, you either buy over time and average in, or you are a patient and a deliberate person that says, the stock comes to me, I'll take it. If it doesn't come to me, I'm not chasing it. You are that kind of an individual. The upside for you will be higher. If you're a chaser of stock, you have a lower margin because you're paying too much. And when it reaches its peak, you're the guy with the smallest margin because you paid the highest price. And if you're late to the party, you can't buy. That's just as simple as that. You can't buy when you're late to the party. And there is, that's the same with real estate and many other investments. You just have to have that kind of mentality to say, okay, I know I'm going to do. I'm a value investor or I'm a long-term investor, and I'm prepared to get my best deal. And if I miss it, I miss it. I'll find another one. Remember, it's always easy to buy stock. Generally speaking, it's very easy to buy anything. If you're a buyer, you got money, people will take it from you. It's easy. But if you're a smart buyer, you're a patient buyer, you'll get something at the price you want to pay that's more fair to you, and you made your money already. You've already made your money. And so on GameStop, we're at $59 a share. It didn't reach 55 while I've been talking to you. We got 10 minutes to go in the day, and it didn't reach 55 from what I can see here. But the company might be 55 tomorrow morning. And if it is, it is. If it isn't, it isn't. If it goes to 64 tomorrow, fantastic. Then the low might be going forward 61.10. Everything changes and everything adjusts back and forth, but you have to be a patient buyer. And this is why I talk about this GHVI for Gore at $12.91. That's I don't mind paying that kind of a price. But if that backs off even into the low 12s, even better. The Virgin Group Acquisition Corp, $15.52 right now. If that one wants to back off a little bit more, even better. Because for every dollar you save now is a dollar more you'll make at the end on the other side. Because eventually you're going to have to do the hard trade. And what is the hard trade? Selling. The hardest thing to do is to sell. Always. What should I sell my house for when I list my house? What should I try to sell my used car for when I'm trying to flip off my used car? I'm having a garage sale. What should I ask for my used couch? If you want to get rid of it, it's $10. You'll get a buyer. But if you want to get some dough out of it, you might have to ask 58 or 65 or 150 or whatever the deal is on a garage sale. But on stocks, the hardest transaction is a sell transaction. Because all of us want to get the high price. We always want to score the best deal, but that you can't have. You have to just be satisfied with the best you can get. But if you bought low, you're going to score better than somebody else. AB says, thank you for the donation. My thought is to invest $500 to $1,000 at a time on things like these SPACs and wait a long while for a good profit and put them into ETFs, index funds, good or bad. Not a bad strategy. Not a bad strategy. I love these SPACs when they announce. That's when I love them. I like SPACs before, but I have to know who's running them. If I know who's running them and there's a good name there, then I like them. But when I see the deal, when I hear about the acquisition deal, then I'll find out whether I really like them or not. And that is why these two particular SPACs I've mentioned now in the last few days, I like them because of the personalities coming in, the businesses coming in, and the upside of promotion that I know will come. The investor relations teams that will be behind both of these public companies once merged together will be phenomenal. And they're going to have a wonderful time exposing the virtues of these public companies and all the areas that they're going to get involved with, because they're sitting on mountains of money to diversify themselves out. And they may well buy other private companies that are flowing cash right now, but they're not big enough to go public in their own right. So you can see these kinds of newly merged SPAC companies starting to buy a $100 million company here, a $50 million company there, a $150 million company there. None of those can go public. They're not going to be big enough for another SPAC to want them, because there are SPACs out there with 300 million, 500 million, 700 million in cash. They're not going to take over a company, private company that's worth $85 million. They're just not big enough. Now, in my day, when I was a broker back in the 80s, an $85 million private company was almost unheard of. They were so huge, I can't believe they're already public. But There were some, of course. There were a number of private companies done very well, but they were family trusts and that type of thing, all heavily structured from tax angles and everything else. But nowadays, you have a SPAC and you want to grab a private company and make it public. You need to find a company that can justify an evaluation of several billions of dollars, that you can also raise hundreds of millions of dollars for, so that they can utilize that cash and grow even larger. And of course, the ultimate for these new SPACs is to have the companies, the merged companies, use their shares from their treasuries as currency to acquire other businesses. That's the best of best. So that you have 900 million cash in the bank and you're only using 50 million of that money plus a bunch of paper that you're creating to bring in another $500 million asset. That is smart moving, because the new group coming in, they're getting paper, they're getting stock, and they're now able to measure their wealth on a minute-by-minute basis based on how the shares are trading at. And their upside is your upside. You're a shareholder. They're a shareholder. They didn't get a big check to come on in and now go spend this money. They got paper. They're addicted to the stock like you are addicted to the stock for upside. And they're not going to come into a deal where they feel that it's overvalued. They're not going to take paper in a public company that they think is worth only half of what they're getting for it. No way. They got a private company making money. They're going to want paper that they feel can rise in value with their involvement coming in and other entities adding on to joining the party. This is what it's about. This is what you want to have happen. So I like deals like this. And this is why I'm watching GameStop. Will GameStop's shares sit around this 50 range now, 60 range, 70 range? And will GameStop in the next few months acquire anybody to add into their family of businesses that will take paper in GameStop from the treasury? That could happen. Absolutely could happen. If GameStop is issuing paper when it's $50-$60 a share, they can acquire a $200 million company here, a $100 million company there, a $50 million private company there, bring in e-commerce type entities to assist them, to bring them further along and make them co-shareholders of GameStop. That for you as a GameStop investor is a good thing, a very good thing, especially if these are cash flowing entities right now. They're already adding cash flow to the pot and just adding to it. So yes, cash is king, but paper goes up in value. Mark, I bought 8 shares of VGAC at 1542. Yeah, I think you're going to make money. I like it. I like it. All right, where are we at? We're coming into the market. A few minutes to go. The Dow is up 205 points. S&P up 25. NASDAQ up 121. GameStop 59.78. Had a little pop at the end here. Was sitting at 58.40 and now at 59. Even touched 60 a few moments ago. So GameStop is pushing 60 around. That's kind of nice to see a little recovery. Still down on the day. We'll see what's going on here. We're seeing... the Virgin entity is at 1550, VGAC. Gore Holdings, GH, is sitting at 1293. AMC at 616, just a tiny bit better, but down on the day. Bed Bath & Beyond down 32 cents, 26.22. BlackBerry up 41 cents to 13.64. Had a little shot here towards the end of the day and a little pullback, but it had a nice shot again. The Dow, like I say, up 190 points. New record highs for the Dow. On the overall market. Same with S&P and NASDAQ. These indices are at or almost at absolute all-time record high trades for their existence. And that is very good. And GameStop, as I say, is coming in here at $59.99 with a couple of minutes left to go. There they are over here on CNBC. They're talking about stocks at session highs for the big markets. And some are up and some are down. GameStop, $60 right now on GameStop as we are trading through that price. And at that price, it did not break down to 55 today. The low for GameStop, 58.02. The high was 72.66 on an early print first thing this morning. That might have been one single trade, and that was all she wrote. Most of GameStop's trading was between about 63 and 58. and we're coming in here at 59.98 or so. Volume on the day for GameStop today will be 25.2 plus million roughly, and we're coming into the very close of the bell, and that is the deal. So analysts will write and pundits will say markets at record highs. When will the crash come? But the markets are higher for one simple reason, folks. It's not a mystery. Why are the markets at record highs? A $1.9 trillion assistance package is coming, a stimulus package of $1.9 trillion. You can count on it. It's going to happen. The Republicans can't stop it. Biden went to them and said, hey, can we negotiate anything? They just came back with him with a $700 billion offer. And he just said, guys, you're not even in the same stadium. We can't even have a chat on this. I appreciate you coming by to talk to me about this, but guys, you're just not with the program. This country needs a boost, a big boost. Let's make it too big. Such a problem. Let's get America moving again. And these markets are reflecting the future of the economy. They like what they see. This 1.9 trillion is exactly what the Dow wants, the S&P, NASDAQ. This is what investors want. Notice oil approaching earlier today, $60 a barrel. Notice other commodities have risen in price lately. Most interesting to see that. Bitcoin is sitting at $44,144, up $5,500 today. 14.3% gain on Bitcoin. Wow, what a shot that was. You can thank Tesla for that. They bought 1.5 billion of Bitcoin on the market back in January. We are closed on the markets today. I see GameStop sitting at 59.82 right now on the after market as we speak. So there you have it. Big gain at the bell. The market loves what they're seeing. And Janet Yellen is also predicting that there will be a substantial boost to the U.S. economy, and she predicts in 2021, as this stimulus rolls its way through the economy, and you know how this works, 1 trillion into people's hands gets spent and will roll over and roll over and roll over, and there'll be a whole bunch of jobs created. She's expecting full employment for the USA towards the latter part of this year, along with the fact that the vaccine rollout will have taken place as well, and more Americans will be vaccinated. Good thing. So the economy will be given a boost from stimulus and from people coming out of their shells, being allowed to go to their restaurants, go to other businesses. A lot of mom and pop shops will try to reopen, might be reorganized and reopen. There'll be a lot of renegotiating of leases with landlords, and landlords and tenants will try to work a deal to get things going again. Hopefully we will, make it happen. We'll see what's going on. Bruce, will you talk about the short report on GameStop tomorrow? If it's released, you betcha I'll be talking about it. I'm looking quite forward to that report and other companies' reports that will come out. We will, of course, be talking about all of the latest developments going on in the marketplace. Any new hot stories that are breaking out, of course, I'll cover that as well. I'll be up nice and early tomorrow, and we'll be on the air as usual an hour before the opening to run you through what's been happening overnight, and then watch the first hour or two of trading and just see where we're at. Absolutely. What time report? I don't know what time it comes out. This is what I'm wondering. I'm wondering if it's out tonight. Will it be out tomorrow morning before the opening? Will it be out during the open? I don't know. They don't call me. These folks at the New York Stock Exchange and the SEC, they don't talk to me directly. I have to figure this out on my own. So I'll keep my eyes open, and I know we'll hear about it because there will be all kinds of alerts posted by various sites. It'll be on CNBC. It'll be on Fox News. It'll be on CNN Financial Network. It'll be on everything. And we will see what's happening. Do you recommend also trading in non-US exchanges, Europe, Asia, Canada? Well, I don't specifically here on this channel because I know that a majority of my investors are following the American, US, the New York Stock Exchange markets, the NASDAQ markets. That is where a vast majority of my viewers are familiar. From time to time, I might mention something that's overseas, but it won't be my specialty. It's not my calling card because, again, I'm in North America, and I am following enough developments with North American traded companies. But let's be honest, many North American companies have divisions overseas, and many overseas corporations have listings in North America too. And so there's a lot more synergy now than ever before. But we will follow, I'll follow all of the, breaking news as best as I can for you that, I feel will be of interest to you or what you may want to take a look at. But from time to time, there might be an overseas thing that, becomes a bit of a story. But the number one market to follow is the U.S. market. I avoid China, as I mentioned in my first show. I will not be covering necessarily China-based companies that are trying to list in New York. I'm just not interested. I just have no interest in trying to follow companies where the ability of auditors and independent observers is hampered by the whims of regulators in China because they're being told what to do by Beijing masters. I'm just not interested in playing that game. I've got enough to follow, more than enough to follow, where the books are open for review, and management are free to comment freely on their opinion of the business world without insulting their political leaders. I would rather follow these kinds of companies. So I'm talking North America here, I'm talking Canada, USA, European countries and companies, but basically US and North American listed for the most part. That's what I love to follow. Alibaba? Yeah, Alibaba. No, thank you. Right stuff. Let's stick with Bruce. Thank you, everybody. Looks like 4 p.m. Eastern time for short report, by the way. Hey, the sooner the better, and I can't wait for it. We'll see what's going on here. Hi, Bruce. Can you explain what analysts do and what they're looking at? Boy, analysts, there are all kinds of analysts out there, I feel. The word analyst is hard to determine sometimes because I just have a tough time with some of the analysts out there. I'm not going to name any names, no firms, but I have seen where I'll read an analytical report on a company, and then I'll look and see who did it, and then I'll realize, oh my God, the guy works for the same brokerage firm that just raised these guys $300 million in fresh cash. They're drinking the Kool-Aid with this company. They're promoters. They're really promoters, and how arm's length are they really? I do have a problem with that. Analyst or analyst, good point. AB, can ETFs actually be set up to automatically pay the profits to the individual? Say someone had 100 grand and it gained 40%. Could someone get a $40,000 check? No, ETFs don't work like that. Exchange traded funds are like a mutual fund that is publicly traded. You're buying shares in an exchange traded fund, and it will move up and down based on the underlying value of the fund itself that they are investing in. So if, like today, if you own an exchange traded fund that is holding a big chunk of the Dow 30 stocks in its portfolio, in other words, it's a Dow fund following the Dow market, you're at an all-time high. I mean, you're up there. You're way up there because the Dow is at an all-time high. Same with an S&P. Same thing with index funds. Index funds move along with the indices. They should be at pretty well all-time record highs right now. So you're more wealthy in value. So your 100,000 might be worth 140,000. Using your example, you had a 40% gain on the index or on a group of stocks like high-tech stocks, chip makers, or mining stocks, whatever group of whatever ETF you got into that specializes in whatever you want to be invested in. If you're up 40%, you're worth 140 grand. Now you want to cash the 40,000 gain, you got to sell $40,000 worth of whatever, and then have them transfer the money to your bank account, and you're back to 100,000 in the account. You got 40 grand in your hand. You've got a taxable gain scenario. You'll deal with that with your auditor, with your tax man, H&R Block, whoever you use, or a personal assistant for that. But the ETF will not send you the difference between what you paid for the ETF and what you've gained on it at the end of the year. That's not how that works. It trades just like a stock does. So those folks out there that have Tesla, that bought it 2 years ago at $300 a share or $150 a share, they're now sitting on an $850-something stock. Tesla, $863. They're up $500 a share. So their portfolio is worth this much money versus this much money if they didn't make any moves. If they want that difference, they have to sell some of their stock at these prices. And they can sell 1 share, half a share, 3 shares, 20, 100. All depends how much they want to liquidate and what they want to do with the cash. How much do they want? If, of course, if someone is sitting there going, I got so much money made in Tesla right now, I've got a big tax problem. Every time I take out $1,000, I have to remember that I need 150 of that 1,000 has to be set aside for the tax man on April the 15th. So if I want, $2,000 in my hand, I might have to sell $2,500 worth of stock and put 500 over here and then spend the $2,000 on whatever I want to spend it on, because that 500 has to go to Washington later. So they keep that in mind. But again, a gain is a wonderful problem to have. I'm telling you, multi-million dollars of profits that are taxable at a capital rate. What a wonderful issue you have to deal with. I feel so sorry for you in a happy kind of way. Not a problem. It's all good. All right. I guess thanks to the stream, Bruce. I'm going to head out. Thank you for being here today. Thank you, Brad. Someone's saying someone is laughing. Megan is laughing today. Bruce really needs a whiteboard behind him so you can do quick references and drawings and stuff. You're not going to be able to read my writing. It's terrible. Thank you, all of you, for all of your comments and questions and donations. I appreciate it very much. AB, that was a very good question, and I appreciate you bringing it up to me. There you go. Bruce, thoughts on telehealth? Don't know the company, but I think that's a future growth area, the overall business of telehealth. That is a growth area similar to at-home testing kits for genome therapy, all of that sort of stuff. Lots of potential there. Pradip, just subscribe, like your video. Thank you for giving my shows thumbs ups, by the way, these live shows. Appreciate that. We're sitting on right now, how many thumbs up we got today? Yeah, we have 483 right now. Thank you for the 483 thumbs ups, those of you who are here tonight and watching me and subscribing to my channel. Thank you very much. We're now at 49,623. We plot along on this channel. Fantastic. People are discovering Stock Markets with Bruce and coming in, and I very much appreciate your involvement. This is beautiful. Thank you, all of you guys. Those of you who've been doing donations to my PayPal account, thank you for that too. Very much appreciate it. Those donations definitely add up, and I thank you. Exciting things happening. Lots going on. There's a lot of things happening behind the scenes that I can't tell you about regarding this channel and the future, but I am very excited and pumped up where we're headed and where we're going as we approach 50,000 subscribers. This is absolutely beautiful. There will be more videos coming out going forward from yours truly, so keep an eye open for those. And we will keep bringing you new stocks you may want to keep an eye on, or we'll talk about our old favorites and some other companies that are maybe back in favor or have come into view, and that might be something to look at. I'm looking forward to covering that with you and answering questions as best I can for you that need advice or some thoughts on what to do here, what to do there. Absolutely lots of upside coming. Moderna, I noticed that stock, the pharmaceutical Moderna, all-time high, 189.26. It's approaching that now. It may have hit that today. As a matter of fact, it did hit the all-time high today, 189.26. Moderna, the vaccine producer, traded at 12.8 million shares today, low of 176, high of 189, aftermarket 185. So they've had a good run. By the way, they don't make money yet. They don't make a profit yet. Just so you know, there's a stock that's trading on real potential. But again, variants are out there. And the word now is that about 10% of all Americans have received at least one shot of the virus. And that is good news. We hope that as many as humanly possible will be given the shot, and that will reduce the ability of the virus to find hosts that it can invade, and we'll die this thing out. Wouldn't that be great? I sure am hoping for that. Jen, they say Jen L. Eggers. Jen is a lucky lady holding the majority of the Bruce. I don't know if she feels that every day. I'm not sure if she feels like. I like this channel even more now that there aren't 100,000 spammers here. We like the Bruce. We've been slowly clearing him out. We've been trying to eliminate him. Simon, I've been watching for a few days. It's been very informative. Thank you, Simon. We're working on trying to keep you posted on what's going on and try to produce, explain the market in plain English. That's really what I'm about. That's what I want to be doing with that. Bruce, what's going on with General Electric? Yeah, GE. That's been a long run of consolidation. They've had a few glitches, positive moves, negative moves. That's a company that might need to spin off divisions a little bit, but I really don't know. I don't have a detailed knowledge of GE right now. I cannot go into it for you. But yeah, GE has had a tough time. Charlie Yoon, 50,000. Bruce is not a meme. We like the Bruce. Thank you, everybody. A. Pearson, I like the Bruce. Thanks, Bruce. You're awesome. Thanks, you guys. Appreciate all the upside. Thank you, Bruce. If you only make $5 in a stock, you have to pay taxes. I think your first 1,000 is free on a capital gain. I'm not sure what it is in the U.S. Taxes are lower for capital gains anyway, and then there are stages. If you make so much money, you pay so much in tax, and then from here to here, you pay so much in tax, and from here to here, you make. But I don't know how you formulate it. I don't know how it works out. And if you incorporate a holding company to do a lot of your trading, if you're an active day trader, you'll actually day trade inside a limited company, and you can do write-offs like your phone costs, your internet fees, trading expenses, perhaps part of the rent of your house or mortgage cost of your house because it's a business, and then you have city, county tax deductions you might qualify for as a corporation, and you end up paying yourself at the end of the year some kind of a dividend or something like that. There's all kinds of ways to shelter. You need professional help when you get into this area, and I can't provide that. Not my shtick, like I said. Please hit the thumbs ups for Bruce. They're saying, what is the tax rate in Canada for capital gain? It used to be at one time, it was only like you only had to pay on half of the gain, and then the gain that you had to pay taxes on was taxable at a much lower rate. Then it became part of your income, and then there are also there were dividend tax credits. If you hauled in dividend income, you paid a lower tax on that. It changed over the years, and again, I'm not in this field, so I can't be an expert on that. Thanks. See you tomorrow, says KYKS. Tim Bowman made $5,000 on Tesla today. Well done. Let's see. I made $100,000 trading in Quebec in 2020. What's my taxes like? No other income. Can't help you there. I'm not in Quebec, and frankly, I don't care. I don't care. I'm not there, and I'm not in that issue. That's for you to figure out through your friends. But you know what? You can Google this. You can Google stuff like this easily. Just ask the question in the box. Hit the Google button. You'll get an answer. It's incredible. You'll find the province of Quebec might react to you. Canada's taxation services and a whole bunch of independent auditors will automatically show off all kinds of stuff. Anyway, hi, Bruce. Thanks for a great channel, Tim Olson saying. You enrich my life by sharing important and life-changing knowledge on that. You have a very wonderful charisma. Keep up with what you're doing, Tim from Sweden. Thank you, Tim. Thank you very much for that. Love that you're all here from around the world, the UK, Europe, people from Asia, from Australia, Canada, USA, the Caribbean. You guys are from all over the place. Love it. Thank you. Let me know where you're from. Love to say hi to you. Bruce, do you have any paid capital gains if you bought the stock with a VPN? I don't know. Can't go there. I just can't go there. I needed professional help before all of this. Laugh out loud. I hear you. There's all of us, one way or another, may have needed professional help well before we started doing this. Bruce, do you have to pay capital gains if you bought the stock with a VPN? Again, I can't help you there. It's still the same way you described in Canada. All right. Cristiano, hey, Bruce. ACB is getting high by the day. Is it because Canadians are puffing more? I love the channel. The cannabis stocks. Guys, for those of you who don't know, here in Canada, cannabis is legal. You're allowed to buy cannabis in licensed provincial stores. You're allowed to consume. You're allowed to buy edibles. You're allowed to buy all the other spin-off products like creams and drops and all kinds of cannabis stuff, cannabis chocolate you can get. I'll tell you, here in Creston, I think we have 3 or 4 stores that sell cannabis. We have 5,000 people. Now, there are 15,000 total all around us, small communities that kind of come in here and come out. But we have 4 cannabis stores here. And you know what you don't see? You don't see anyone outside a cannabis store lighting up a joint. You never see that. As a matter of fact, I can't remember the last time when I've been out to go grocery shopping or get gas for my car or whatever I need to do. I cannot remember the last time I could smell the distinctive odor of cannabis. You don't. It's now that it's legal. The edge is off for most people. They now confidently can walk into their little store and see the staff behind the counter that are very knowledgeable about what they're selling. And you find your favorite store from your favorite retailer, depending on the staff or the ambiance or its location. The selection's the same. It's all regulated product from certain companies that are allowed to produce it under license from the government. And it's just like buying alcohol. It's very regulated, or cigarettes, very regulated. And you talk to the person behind the counter for what it is you're after. Are you after some jelly beans? Do you want chocolate? Do you want something to add to a coffee? Do you want something to add to whatever liquid? Do you want to bake something? You want to bake muffins with some cannabis infusion in there? They'll help you with all. There are books now available to help you figure out what to do with this stuff. It's a whole other industry. 20 years late, should have been done 20 years ago, longer. The stigma around this has been just ridiculous. There are not potheads hanging around all over Canada because this is legalized. It's just not the case. More and more states in the US, of course, are becoming legalized. More and more countries around the world are slowly but surely. But the United States government, as a federal government, still views cannabis as a grade 1 kind of drug, serious repercussions. It's so stupid. It is so idiotic. I'm hopeful that Biden and the Democrats will pass the law to legalize cannabis on a federal level and then leave it up to the states to regulate within their borders. But this nonsense has just got to stop. But you know what? Certain countries grow up at a faster pace than others, and they mature out at a faster pace. And there are interest groups in certain countries that are just stronger than in other countries. And there you go. So anyway, Canadian, there have been a lot of stocks companies have gone public in the cannabis space, and there have been mergers and acquisitions in the private side. And it's a tough one to navigate because there is no one dominant. And I'm not into the product myself, and I'm not into the stocks either. I know of some out there, but I don't have any of the financials off the top of my head. There's stock symbols I don't know, even their names. I just don't follow it. Bruce, do you have to pay any capital gains if you bought the stock with again, this has been asked now 4 times. I should have read that comment before I highlighted here. So glad here in the UK, we get a 12,500 sterling capital gains allowance. Can't see myself reaching this anytime soon, maybe with Bruce's tips. Well, that's good to know. I know that in Canada, you have your gains and your losses, and you pair them off, and then whatever the difference is, if you have a loss, you can carry it forward. If you have a gain, you declare it, you pay the tax on the gain. If in the next year you have a loss, I'm not sure if you can go back and get back a credit on gains made that have been paid on. I'm not sure how that works. Again, you gotta talk to a tax professional. That's something that I can't help you with there. What else have we got? C Hill, I bought 6 GameStop at $315 a share. My girlfriend is getting 2 infected teeth pulled. I don't know who's in more pain. Well, I'll tell you this, in a couple of days after she gets those pulled, she's going to feel a lot better. In your case, I don't gonna guess that your GameStop's gonna be back to 315 in the next 2 days. I don't think so. But if you're a longer term investor, it'll just be a constant toothache that maybe will get less and less. Or you got some shares, you bought 6 here, and then going forward a month or two, you might buy 6 more at $59 a share, whatever, and you're down now to the difference between the two. You might be down to a $160 average, 180, and then maybe if 3 or 4 months later, you'll average down again. And if you're a long-term holder, you'll figure it out. Yep, Brandon, all the red states still throwing the book at weed smokers because they're 50 years behind as usual. Absolutely. There are the Bible Belt states and provinces and territories of the world. What are you going to do? Charlie, you're not alone. Keep holding. Julie, this feels like a family helping each other out with no sneaky agendas. Well, once the trolls take off and get bored, and they're bored now because we don't have 13,000 people here at the same time. We're kind of settling into the channel as it grows. It becomes a little more familiar, and you begin to notice the names, and we slowly eliminate those who we don't want here. Usman X, in the UK, we also get a separate savings account, Stocks ISA, where you can invest up to £20,000 per tax year. This is separate from the $12,500 allowance, and all gains from the ISA are tax-free. So that's encouraging UK residents to build a savings account, build a portfolio under these structures. In Canada, we have TFSAs, tax-free savings accounts. We have RRSPs, registered retirement savings plans. In America, you've got the IRAs. And so there's ways to, grow wealth tax-free, longer term, and that's perfect. And you can open up in the US a Robinhood account for these investments. In Canada, you can open up accounts online through the banks and brokerage firms where you can manage your TFSAs, your RRSPs, and you can trade those right off the phone. You can do that too. More and more commission-free services are coming for smaller investors. I'm sure in the UK that's also coming along. And you have control of your destiny, and you can build your wealth tax-free under certain conditions. I think it's fantastic. Absolutely great. Jason, thank you for this donation. Sold all GameStop today. I'm used to buy the OCGN, and I'm broke. I broke even. Way to go, trader. Way to go. You've broken even, and take a look for the next opportunity. It can be done, but you've got to have the, you got a chutzpah to do it, and more power to you. Kathy Ma, we get about 5,500 per year. I think TFSA is not at 50,000 limit. Again, it all depends. Again, I'm not an expert in this area. My any time frame outside of trading hours is so boring now that I got into trading. Right now in the aftermarket, GameStop is $59.37, down 63 cents. There's nothing going on GameStop aftermarket. AMC right now is at 606, down 12 cents on the aftermarket. Tesla on the aftermarket is down $1.40 to 862. The Bitcoin is at 44,172, gain of 5,562 today. Futures are showing the Dow showing a gain for the futures, but we'll see how that rolls over overnight. But today was a good day for the markets. Dow up 237, S&P up 28, NASDAQ up 131. So all of those ETFs and index funds were doing pretty good. Not a bad move. A question in Market Watch headline is Tesla's $1.5 billion Bitcoin buy smart corporate finance? Experts weigh in. My thinking is I wouldn't be surprised if Tesla, the company, not only bought the Bitcoin back in January, but that they also hedged themselves on a downward move on Bitcoin. They probably have hedges against the position to protect them against the down move. Up move, they'll let it go as high as it wants to go. Hey, you want to go to 45,000, 50,000, 60,000, you go, and we'll take the gain, but we'll hedge that gain. And that would be today. Wouldn't surprise me if today Tesla, during the day, moved their hedges to protect themselves against the original price of Bitcoin, and now they've moved their hedge up to the current value of Bitcoin, and they're hedging against it going back to where they even bought it. And so if it went back to where they bought it at, they still have a 30% gain on Bitcoin. They've got advisors. People studied, sure. How to do it? I don't know. I don't do the Bitcoin game, but there's ways that can be done. And as I said before, if you're a shareholder of Gamestop, you're a shareholder of course, AMC, or you bought some of these other stocks that took a run and you're caught way up high, you have 100 shares or more of any of these stocks, you can bring income in now by writing call contracts against your position to at least bring some income in. You might go out of the money a ways from where we are currently and bring in a bit of a premium for the next 2 or 4 weeks, 5 weeks, 8 weeks, whatever it is, and that'll help bring some cash in against the position, the price you paid. If you've only got 5 shares of GameStop at $300 a share, you can't write an option. You can't do that. But if you've got AMC and you bought 100 shares of AMC at $18, that's an $1,800 buy. Right now you're at about $6 and something cents a share. You have a $600 position. You can write a call contract against AMC. You might have to write an $8 or a $9 contract. You could write a 10, but you better go out a few weeks and you might bring in a couple of bucks. But if it brings you $2 for say a 6-week contract at 10 or a 4-week contract at $10 strike price, you're bringing in $200 on your $600 value. You now have $800 on you, $600 in stock, $200 in cash. You're not back to 18 yet, no, but you're $2 closer to 18 than you were a second ago before you wrote the contract. And once that contract expires, if it expires worthless, that 200 is yours, you can write another contract. And maybe every month you write a contract on your AMC, $3 or $4 out of the money. You might not get exercised, great. You bring in $200 every month for your AMC investment. And after 5 months, you've brought in $1,000 on top of the stock. Even if it's still at 6, you've got $16 now of money instead of $6 worth of money. You got in at 18, and there's a break-even scenario just around the corner. Of course, if the shares are trading at $9 a share and you're writing $12 contracts, you're ahead of the game by that point in time if you've written $1,000 in premium revenue. AB, thank you for the donation. GameStop is more stable because of retail holders now. Yes, I would say that the holders of the stock now, the retail holders of the stock now on GameStop are probably virtually 95% of the retail holders. My guess is they own this stock cash. They have no debt against it, no margin against it at all. It's at $59.35 in the aftermarket. And that's probably why we're not seeing massive amounts of stock coming in at the opening where people are being blown out because they're under margined. It's not happening. The stock is really mellowed out the last couple of days. For some people, we call that boring. Others call that stable. But this is where it's settling in at right now. And interestingly enough, you take that $300 to $400, that big spike out of the equation, and you look at the chart now for 6 months, 8 months, a year, you take out the big takeoff that it had, and you'll see a steady move up on the chart. It's a steady move up. That so-called 200-day moving average pricing that technical analysts are watching. The longer GameStop stays up here, the more stable it gets here, and the odds of it going back to $20 a share. Remember Andrew left, the shorter? The stock was at $60 a share, and he said it was going back to 20. And what did it do? It went to 200. It's not going back to 20. It had every chance to do so in the last 4 sessions. All the volume that came in, all the selling that came in, it didn't do it. People have been allowed to buy stock again through the online brokerages, and the stock has really stabled out in the last few days. I'm not saying it's an all-star performer overall, but it's definitely not losing 50% of its value every single day, day in and day out. It's not happening. Anyway, we'll see. Why did OCGN spike today? We did talk about that on the early show today, OCGN. We were mentioning how I think there was some kind of an upgrade. There might have been a financing or a deal made. There was Institutional investors are buying the stock. The high for the day today, 1877. The low 913. Aftermarket right now 1440. So it's backing off. There's a lot of speculation there. It may have gone quite a bit too far, quite a bit too fast, and now we're getting a bit of a consolidation on the stock, and it might not be able to hold these gains all that much longer. We'll see. Tomorrow's another day. Anyway, there you go. Let's see. Michael, Stock Markets with Bruce. Do you think cryptocurrency is more risky than GameStop because there's not even any asset? Well, yeah. Cryptocurrencies, I've seen Bitcoin jump 20% in one day, either direction. I mean, talk about instability. It's a very volatile commodity. Now, this Tesla move is really adding to it today, and might negate a bit of downside for a while. But will it go straight higher? I don't know. Right now, anyone that has ever bought cryptocurrency in Bitcoin, right now, they're all up. Everyone that owns Bitcoin is up on their value of their Bitcoin compared to what they paid for it, because it's at its all-time high. So there you go. But, does that justify the price it's at? Does it justify keeping it here? I don't know. GameStop, it's an operating corporation, but operating corporation stocks fluctuate too. And GameStop really went wild and wacky not too long ago. So there you go. Bruce, did you see the 13G filed for GameStop today? And what does it mean? I did see that. I mentioned it on the early show today. It sounds to me like an insider's report to the SEC, and it's another like once a month you have to make a report as to your positions, and it sounds to me there might have been a slight adjustment up or down in the thing, but I don't know how much. But it looked to me like it's the Fidelity position that's been revealed at 13 point something % of the company, and so we'll see what's going on. The Jade Assassin, due to the slaps on the wrist by the SEC, do you think that the short report will be lower than it actually is in favor of shorters? No, there'll be no favors given to shorters or anything like that on the short report. I don't think so. Matthias, there was a lot of pre-market movement in the medical market. Let's see here. Been buying BTC since 6,000 last year. Robert Nunes. Hi, Robert Nunes. Robert, GameStop made me turn into a day trader and made some bad decisions. Thanks for talking some nice into me. Great advice as always. I'm back to being a long-term investor. That's a lot less stressful. I'll tell you that. It adds up. The stress can add up and kill you, and it can kill relationships and friendships, and can really affect your appetite, weight, health. It can really get you. You want your investments working for you. You don't want to be working for your investments. You want them working for you. And so take that tack and you'll be around a long time. You'll live to be a very healthy older person. And then you too someday will give advice at an older age to the younger crowd. Thanks, Uncle Robert. Someday you'll be called Uncle Robert. Samuel King, I bought into this Gore SPAC you talked about at $12.90 when it dipped just before the close, and it jumped into the after hours. So I just want to say thank you for your insight. I really enjoy your live videos. Well, let's take a look at what it's doing. How well are you doing on this thing? This is great. I'm happy to hear that. It is now $13.50. Way to go. Yep, it's $13.50. It did take a spike at the end of the day, and this is a winner. I think it's a winner, and anyone who's getting into this, I think you'll do all right. And again, it's a great medium to long-term hold. You don't have to hold it for an hour or a week. I think 3 months to a year. Let it merge in, change its name, keep going, let them bring out all kinds of news, and watch the show. I think there could be some gains there. Anyway, we shall see. Do you think that the VGAC will be worth more once the merger is completed? I think the first 3 to 6 months of the merged company will be very good for the stock. Very good. I think they were going to be extremely busy with a lot of corporate news and updates. They'll have $950 million cash in the bank when they list, and I think that they're going to be followed quite nicely with Richard Branson as an unofficial promoter of the company. I mean, he's putting 25 more million of his own money into this stock before the merger is completed. He's into this private placement. I like the partners, and I like what we're going to hear. I'm pretty excited about what this thing's going to do. I don't know what they're going to say. I mean, I don't have an inside track on exactly what they've got cooking, but something tells me there's a whole bunch going on that will be revealed. They're in a quiet period now. They'll be quiet. They'll prepare their books. They'll call their shareholder meetings. They'll vote. Their shareholders will vote the deal on both sides. It'll pass. Then the final closing will be done. They will relist the company. One day it'll be under one name. The next day it'll be under the new name. One for one, and away we go. So yeah, I kind of like it. The most stressful thing for me is a stock that declines slowly, says Infinite Universe 88. That can be a slow water torture thing, kind of hard. A Virgin Group may be a while. I think SPCE is a better bet. More power to you. Jared, I have held ESKO for 2 years, all the way down 80%, and now finally broke green today. I have no issue holding Gamestop. There you go. If you like the corporate story, you'll wait it out. Samuel, I believe that as well. Thanks again. Thanks a ton. Swash Buccaneer, nice on the GHVI bump. I bought two. I bought too high earlier, but managed to average down, and now it's gone green for me as well. Way to go. Stick around for the show and let them make the merger happen and see how it goes from there. Fantastic, guys. All of you for being here. Thank you. Thanks for these thumbs up today. 603 thumbs ups have come in now. Please keep them coming. Fantastic. We're also growing on the subscriber count for Stock Markets with Bruce. 49,631 roughly. Fantastic. I'm glad to see that. And those of you who are picking off these shares, fantastic. Way to go. Be very patient buyers. Spaceballs, the user, thank you for this donation. Hey, Bruce, I love this show. I tune in every day. Is there any advantage to selling a longer position, or is there any advantage to selling a longer option rather than keep selling 1 week option? There's one advantage. If you sell, and I don't know what stock you're talking about, so I'll talk about GameStop. The stock is at $60. Okay, let's just call it that. If you're going to issue an option on GameStop that expires this coming Friday or next Friday, and you're going to write a $70 call option, it's just $10 out of the money, you're going to get a bit of a premium. I'm not sure what it is. It might be $3 to $8, $10 a share. I'm not sure. But if you write a $70 call option that has a month to go, you'll get a much bigger premium. If you write an $80 call option that has a month to go, you'll bring in more money for the premium there than if you wrote a $70 contract that expires this Friday, because you're offering time. Time is worth money in an option. The longer the option can live, the higher the premium. The downside for you is you've committed your shares for a longer period of time. The upside is more premium money now and a higher exercise price later. You're saying to the buyer of your contract, I'll let you have it for $80. Even though we're at 60, you can buy it off me for 80, but you got to give me 10 or 15 right now up front. You're actually selling it for 95. If you get $15 now, today, cash, plus $80 later, you're offering to be taken out at 95. What's wrong with buying 100 shares of GameStop right now at $60 a share and offering it for sale at 95 and having that happen? Boo-hoo. You made $35 profit on a $60 buy, 60% of your money, just under 60%. Good move. On the other hand, if you buy the stock today or you own the stock today and you write a $100 exercise, but it's a 3-month contract, you're giving the buyer 90 days to take you out at $100 a share $40 higher than we're trading at, and you might get 20 bucks a share right now for that contract. It all depends on the premium pricing. You have to go to the options market to see it. I don't have that here. So that's the upside of writing a longer option, more premium, and you can also pull the string on the exercise price higher and pull in a higher premium down the road versus the other side. And that is, if you're going to write an option that expires this Friday and it's an $80 price for the exercise, you're not going to get a ton of premium, but the odds are that you won't be exercised and you'll get all that money and you'll keep it. But if you do the math in your head and figure, well, wait a minute, if I sell a contract for this Friday, I get this much. If I sell the $80 for next Friday, I get more money. The difference is those 5 extra trading days. And if I sell an 80 for the week after that instead, I get even more money because I'm offering now another 5 days of life. So the more time you give for the same exercise price, the more you get. And now you begin to figure out, oh, I see what's going on. Every day that I give the contract holder, I get this much money every day. It works out to so much a day for 10 straight days or 15 days or 25 days or whatever the number of days left. So it's up to you to decide which way do you want to go. Do you want to take, you want to write a short contract that will expire this Friday where you'll bring in a couple of bucks, or do you want to write a contract good for a month with a little higher expiry and bring in even more money, but you're tying yourself up? Keep in mind, you can get out of the position anytime you want. The moment you sell a call contract to somebody else, you can buy that contract back anytime you want on the open market. You don't have to buy it from the same person who bought it from you. You're just buying the same contract that's trading out there from another seller. And as soon as you do that, you have negated your obligation on your call contract. Your 100 shares are no longer at risk of being exercised on you. So if you write a contract this Friday with a $70 exercise price, and you bring in $5, and tomorrow afternoon or Wednesday afternoon, the shares go to $45 for like a minute, and that call contract you sold for $5 trades at $1.50, and you put in a limit buy order at $1.51, where you're prepared to buy the contract back at $1.50, having sold it at $5, and it happens that you get it back, you're no longer obligated to offer that stock at $70 a share. The $3.50 you got, the difference between what you sold it for, what you bought, that's your money. $3.50 a share, $350 for 100 shares. Now you sit back and go, okay, well, let's see what the stock does now. The stock comes back to 50.55. There's 2 days to go until Friday now. It's Wednesday. What do you want to do? You might write a 65 contract that expires in 2 days, or you might write a $70 contract that expires next Friday. That's a 9-day contract. You might bring in $5 or $6 for that one. You do it all over again. So now you write a contract for $5. You put a buy order in to buy it back at $1.51, open buy order. And if the shares fluctuate along and then they have a bad hour, they drop $8 in an hour, you might get that contract at $1.51. And now you scored another $350. You can do this all the time with your holdings, depending on whether you have enough shares in any one stock. That's the strategy a lot of people employ, and it's done by institutions and by hedge funds all the time. All right, but they're doing it in hundreds of contracts, not one at a time. But you can do it with one. You can do it with 10, 5. It doesn't matter. Alrighty, of course you can go long and you can go long call options. You can go long put options, and you can try to play the swing game. The problem with that game is the clock is working against you. On the other side, if you're the writer of the sale of the contract, you created the contract, the clock is with you. Because every day that goes by, those options will go down in value. They have less time to live. And if they're out of the money, they drop quickly. You might find that the first day or two, you were prepared to buy the contract back at $1.51. But after that, you cancel that order and say, no, I'm prepared to pay 51 cents for the contract now because I'm not paying $1.51 anymore. Or you might decide, I'm not buying it back at all. This thing is $8 out of the money. There's 1 day left to go. I'm going to keep the last 50 cents. I'm getting it. On the other hand, you might buy it back at 51 cents on the last day and rewrite a new contract for next Friday, offering a week, with the weekend, of course, taking away 2 of those days, offering a contract good for a week with a 70 exercise and bring in $4 or $5. and ride that game until next week sometime. A million strategies to play with this market. Please explain wash sale. Thank you. What's a wash sale? I'm not sure. I'm not sure what a wash sale is. You bought the stock at 50, it went to 48, went back to 50, you got out, you washed out. I don't know. Is that it? I'm not 100% sure. There are people who, for example, you buy GameStop at 60. You write a $70 contract against the stock, good for this Friday, all right? And you get $3 a share. I'm pretending a number. I'm making a pretend number. The shares go down to 60 to 55. The contracts go down to $1. You buy them back. You made $2 on the contract. The shares come back to 58. You're $2 away from what you paid for them. You sell them at 58. You made $2 on the contract. You lost $2 on the stock. It's a wash. That's a strategy. So if you're into GameStop at 70, you bought the shares last Friday at 70, and you wrote $80 contracts for 3 weeks, and they're worth $10 at the time, and now the stock's at 60, and tomorrow morning they open at 52, bad opening, you might be able to buy those contracts back at 3, score $7 on the contract. And as soon as your shares get to within $7 of what you paid for them, 63, you sell them and you're washed at a break even because you made 7 on the calls, you lost 7 on the stock, and you're even. On the other hand, you let the shares come back up a bit, you write new contracts at 80 again for 3 weeks, you take $8, $10 cash again, and now you wait out and see what the market gives you. There's all kinds of strategies. I grabbed 17 shares of VGAC. I'm already taking a bath on GameStop, but I'm still holding them down 68 though. It hurts. Well, if the VGAC goes up for you a little bit, fantastic. That'll ease the pain. If GameStop settles in here and has some good corporate news the next week or 2 or 3, short reports coming out shortly, little pop back to 75, 85. Long term, you're building it. Again, it's you just got to sit tight and just be an investor, not a flipper. David, thank you for being here. Have a good one. Talk to you next time. 12 years, no fat. And love the show. Been watching from the crazy sidelines over the past few days, and I've really been intrigued. I think I'll invest in VGAC soon. When will it be merging? In the next 2 to 3 months. It's a second quarter of 2021 estimated time. They will bring out a closer date when they have it. Their securities lawyers are working 24/7 to do the documentation. Their auditors are working. The SEC filings are being done. There's a lot of work to be done. So do not worry. It's happening. Alex, do you have a Patreon? I would be interested in setting up monthly donations. I do. I have a Patreon for Traveling with Bruce, my other channel, Traveling with Bruce. Go there and you'll find the Patreon link in the About section. And if you make a donation to Traveling with Bruce, you're making a donation to me, and I thank you very, very much. What's the next OCGN tomorrow? I'll tell you when we get there. How about that? I'll let you know when I see it. Hi, Uncle Bruce. Can you explain what is a wash sale if we average and sold the first stocks at a loss? We've kind of covered that a little bit. When you buy a call contract and you don't wait to expiration, do you sell the contract at current price? I don't really understand the process of getting out before expiration. Yeah, when you buy a contract and you're long now a contract, you can sell it right now, anytime you want. There's a market always for your call contracts and put contracts, and they fluctuate with the price of the stock that's covered on that contract. So if it's a GameStop contract, call contract, GameStop goes up and you have a call contract, your call contract will go up too. But your call contract will only go up to a portion of the gain of the stock, because every day that goes by, your contract is expiring. There's a date where the contract ends. Its life will end. So if you've got 10 days to go before the last day of your contract, every day that goes by, you lose 1/10 of its value, especially if it's an out-of-the-money contract. So if the stock is at 60 and you have the right to buy stock at 70 for next Friday, you're $10 out of the money. And every day that goes by, 1/10 of your option value will disappear on you because the time is against you right now. Now, the shares go to 65 tomorrow. The contracts will go up in value, but the stock might go up $5 a share, but your contracts might only go up $1.50 a contract because the time took the rest of it away. You might have gained 5 had you had the stock, but you only gained $1.50 on the contract. The shares the next day go to 70. You still got 6 days to go on your contract. Now you're even at your exercise price. Your option is a $70 call. The stock's at $70. The value of your contract is a pure time indicator of 5 or 6 days to go. And you might be trading at $6 a contract, $8 a contract. It all depends. But the next day, if the shares go between 72 and 68 and close at 70, your contract has gone down in value because the stock is still at 70, but your contract just lost another 24 hours of existence. On the next day, the shares go to 75. Lucky you, your contract is worth $5 book value. You're in the money, $5 on that contract, plus the 4 days of time left to go. So you might be trading at $8 or $9 a contract, but that's what you might have paid for it in the first place 10 days ago. You paid $8 or $9 because you were way back. You had way more time then. You have much less time now. So at $5 in the money, you're back to even. This is the problem of buying contracts versus being the creator of the contract. Again, the person that created the contract way back 10 days ago, they got $8 a contract. You might have been the buyer that bought that contract. They got $8 off of you when the stock was down here. The stock is now up here, and the contract is still only worth $8 because there's only 4 days to go. The next day, the stock goes to 73. Loses $2 on the day, your contract will drop $3. You'll lose the $2 book value plus another $1 time. You'll be down to $4 or $5 on that contract. If stock the next day goes to 72, you're down to $4. You're dropping, baby. You're losing your money. You've only got $2 book value, and you've got very little time value left. And if on the day of exercise, the Friday itself, the shares are trading between 72 and 74, your contracts will be worth between $2 and $4 all day long. That's all they'll be worth. You sell them at the end of sometime during the day, you sell them. The buyer might well be the very person that created the contract at $8 2 weeks ago. And they're going, yeah, I'll buy it back from you for $2.50. Thank you. I sold them for $8. I'm buying them back for $2.50. The shareholder is a happy guy because the shares have gone up in the last week and the contracts went down and they scored a $5.50 or so gain per share, and their shares went up $5 a share or $8 a share. They're happy on both sides. You're the loser. You took a chance taking a call contract at $8 to get out at $2.50. However, had the shares gone to $100 a share on a pop, your contract would have been in the money $30. And you would have probably got $35 for your contract. You would have had a big score. You got from $800 on a contract to $3,500 on a contract. That was your upside game. That leverage was given to you, but it never happened. Not this time. Maybe next time, but you're now starting with $250 play money if that's all the play money you've got. The holder of the stock is in it for the long haul. They bought the stock at whatever they paid for it. They have 100 shares. It was $60 a share. They wrote a $70 contract with 2 or 3 weeks to go. They brought in $8 and they waited and they still hold the stock 2 or 3 weeks later, and they're up $550 plus the value of the shares, whatever they went to. If they're trading at $72, they've made $1,200 on their 100 shares, and they made $550 off of you for the contract. They made $1,750 of a gain from $60 a share to the 72 mark over 3 weeks. And now they can write another contract because they're free to write another one. They might now write an $80 contract good for 3 weeks. Get $8 for that one. And here we go again. That's the difference between a buyer of a call and the writer of a call. See, Bruce, it's good to see that Canada Now is internet service. Love the show. Love the lessons on options. Thank you, Bob. We just got internet last week, and it's just so exciting. We heard that the rest of the world was on the internet back in '93, but in Canada, here in Creston, we're in there. Cindy, I wish I understood more. It sounds so interesting. Well, the more you stick around, the more you'll learn. Time is your friend if you're going to learn how this works. Kendra, hi, Bruce. What do you think about UFO ETF as a short-term or long-term investment? I invested, but I haven't heard many people talk about it for a second opinion. Feeling uneasy. Thanks for any insight. Don't know anything about this UFO ETF. I don't know anything about it. What do they invest in? What's the portfolio? I'd love to know. Wash sale is related to taxes. At least wait till tomorrow for GME contracts. Wash sale with taxes. Let me talk to you about that. You have a position in GameStop. You bought them at $50 a share. You sold them at $60 a share. You made $10 a share. You made $1,000 profit, let's say, on a position. You have another stock, AMC, and you lost $1,000 on that one. You sold out and you lost $1,000. As far as the tax man is concerned, you made $1,000 over here. You lost $1,000 over here. Overall, you're even. That's a wash. You don't owe any taxes. That is how it works with the tax department. Your capital gains against your capital losses, you broke even. You don't owe us any taxes. Keep trying to make money. That's what that means. All right. Here's what Jared's saying. Wash sales when you sell a stock and buy it lower, less than 30 days. You can't count your loss on your taxes. Again, losses against gains will wash you out. A wash sale prevents you from taking the tax loss if you sell a stock at a loss and repurchase stock within 31 days. Again, it depends on where you live and what these rules are. But I try to talk about the big picture. What's going on? Brandon, tomorrow we will know how many shares are short, what's really going on over there. What's the point in buying an in-the-money option? What's the point? Why would you buy an in-the-money option? Well, here's the reason. Let's say you think that GameStop is going to go up in price, but it's not going to go up like $100 in the next couple of weeks. You think it might go up 20 or 30 bucks. And you want to score as much of that $20 or $30 gain, but you don't want to buy the stock. You want to have leverage over the stock and get a nice gain. So you buy an in-the-money call. So you're buying a call option that expires next Friday. Not this Friday, but maybe next Friday. Because we think between now and next Friday, there might be a pop in the stock. So you're buying the stock's at 60 right now. You're buying a $50 in-the-money call contract for next Friday on GameStop. The contract is $10 in the money because the stock's at 60. If the stock goes to 70 between now and next Friday, your option is $20 in the money. Now, if you're paying today for a contract that expires next Friday, let's say you're paying $20 for the contract. You're paying the $10 that it's worth plus $10 in time for the expiry of next Friday. You're into it for $20. The stock goes to $70 tomorrow. It still has 8 days to go before it dies, 9 days. And so your contract is $20 in the money plus time. It might be worth about $28. It'll have $20 book value plus $8 premium approximately. You turn $20 and $28. Get out. You could do that. On the other hand, you think that it's going to go more than just to 70. It might go to 80. Well, if it goes to 80 by, say, this Friday, you're $30 in the money. You have a $30 book value for your contract, which is a $3,000 contract. It's times 100 shares. And time value, that might be $6. You got a $36 contract you paid $20 for. That's why you bought an in-the-money contract. Now, an out-of-the-money contract, if you had purchased a $70 call contract when the stock was at 60, you were $10 out of the money, you're only buying time. That contract might run you $8. But if the stock goes to 70, goes up $10, it has $10 book value and it has time value till next Friday. It might be trading at $16. So you've doubled your money. You made $8. But you had to have, you gained 10 on the stock, but you only made 6 on the contract. It could be, though, that your contract trades at $16 and you're 10 in the money and 10 in the money, 6 for time. You only made a slighter gain. So you may want to buy a contract that's in the money so that you gain dollars every dollar it goes up on top of the value of your contract. That's what people will do. But there comes a point in time where there's a limited return, unless the move is substantial. If it's, like I said, if it's a $60 now and it went to 90 by next Tuesday, you went up $30 a share in value and you got a $50 contract, You're $40 in the money. The difference between 50 and 90. You're 40 in the money plus $5 time value. You get a $45 contract. And if it cost you 20, you've made double your money plus $5. That's why they buy it. That's why they do it. Okay. Ostrike, thank you for the donation. Do in-the-money options auto-execute upon expiration? Or could you possibly miss your in-the-money option if you fall asleep at the wheel? Well, at the end of the deal, you have a value, right? At the very end of the market, Friday night, the options market's shut down and your contract has a value. The difference between what it is exercisable at and the price of the stock at the bell. But you now have to exercise the contract to realize the gain. I recommend what you do is you sell your contract before it expires. I can tell you right now, options traders do not fall asleep on Fridays. If they own contracts that are in the money, they don't fall asleep. They take pills. They don't fall asleep. Their brokers don't fall asleep. There's money in them, their hills, and they'll sell their contract for whatever it's worth in the last few hours of the day, cash out, and then go buy something else. That's the way options traders are. And most of the time, many, 90+% of the time, option buyers in the money, they don't exercise their contract. They just buy it. They just sell them off. And those who wrote them, the market makers that wrote them, they buy them back. They buy the contracts back at a loss or whatever they're worth to flatten out the book. That's usually what happens. It's the case with Apple and Amazon and Tesla options, Gamestop options. The end of the day, the end of the week, the end of the options expiration, everyone flattens out. This is normal course trading and business. All right, there you go. What's your best ever trade? Best ever trade. I traded my being single for meeting a gal named Jennifer. It's the best trade I ever made. I traded up. I went from being a single guy to being hitched up with this gal, Jennifer. And from 76 till now, it's been pretty good. So that's my best payoff I've ever made. Thank you all for these very in-depth questions. I will tell you the story, though. Once I had a friend of mine in the market that I knew, and he was involved in a public company, and we'd known each other for years and years and years. And I've been following his exploits, and his shares were trading at like 45, 50, 60 cents a share. And they were working on a few projects, and they were hoping for good things to happen. This is 20 years ago. And he called me one day and he said, "Hey, listen, we have a guy who's a director of our company, and he wants to move on. He's going to move out of the country, and he's taking up positions. He's going to resign. He's not going to be with us anymore. But he's got stock that he wants to get out of his stock. Can you find a home for a big block of stock?" And it was, I don't know, something like 150,000 shares or something like that. And he was willing to let him go. In one trade, they were trading like 44 to 52 cents a share, very little volume. And I cut a deal with him to take him off of his hands for 40 cents a share. So the day came and we did a block trade at 40 cents. The market was like 38 to 42. We did a block trade at 40, and he was a happy guy. He got $60,000, and I bought the block. I was a broker at the time, and I had a client of mine that was looking for opportunities. And he knew of this company, and I said, "I've got a deal for you. I think I can get you a block of this stuff. You're not going to be able to buy 150,000 shares on the open market, because you'll move the market up if you're trying to buy 150,000 shares. Even in a week, you'll move this market. But I can get you 150,000 at 40 cents. So we bought the block. And so my client was a happy client. He got 150,000 shares. My buddy was happy because his director got out. 6 months later, a development took place. A positive corporate thing happened, and the shares got halted at like $2. And we still had these 150,000 shares, and they got halted at $2. And the company made an announcement. And about 4 days later, they opened for trading again. There was a big announcement. And it opened up at $8. So I have a client with 150,000 shares trading at $8. And the client says, "What should I do?" And I said, "We should start selling now." but not all of it. Let's just feed it in, because I don't know if this is the high, it'll go higher or not. He said, yeah, whatever you think. So we started selling 10,000 shares every day for about a week, and we just offloaded 10,000. So we sold 10,008, 10,820, 10,000 at 785, 10,000 at 805, just fed it out. And over a week and a half, he cashed in beautifully. And he loves me. And that took care of a few bad trades we had, and made him a winner. And I was a happy broker because I had a client that had been salvaged. But, what are the odds? We didn't know 6 months later there would be something happening that would just transform this company into something completely different. Had the director known, he wasn't going to sell me the stock at 40 cents. He didn't know. None of them knew, but things had happened, and they made a few moves. They made a few partnerships, and that's what companies do. They're always moving. They're always evolving, and that's what this one did. So anyway, there you go. Folks, I'm going to say my goodbyes now. I've been on the air for 2 hours. I got to shut down here. I've got to do 2 more live shows today. I have a live show to do at 6 o'clock or 7 o'clock Eastern time for my sponsor members for Traveling with Bruce. That's this channel right here. And I've got another live show to do for the public, and you're welcome to join me at 8 o'clock Eastern on Traveling with Bruce, where we're going to talk about the latest news on cruise ships and traveling. So I'm going to say goodnight here and get some rest, get a bite to eat, hydrate, and get ready for 2 more live shows to finish off my Monday. Just a typical Monday for this guy, full-time YouTuber that is really working hard. Thank you, all of you, for being here. See you later, Uncle Bruce. What was your cut on those trades? I got a commission. And when he comes to town, he took me out to nice restaurants. That customer made me a lot of commissions over the years. I was so happy for him. It was great. Bye, Uncle Brucey. Thanks, Bruce. Everyone's saying great job once again, Bruce. Again, thank you guys for being here. Thank you for these donations you're making to my channel. I really appreciate it. Thank you for your kind words. Love your questions. And I'll be on tomorrow, 1 hour before the opening. We'll be on, and we'll see how the markets start off tomorrow. And we'll keep you posted. Thumbs ups, please. Everybody, give us thumbs up. Jennifer's saying, hey, remind everybody, give you a thumbs up. We got 652 of them so far on this show. Keep them coming, guys. Thank you very much, and have a great evening if I don't see you until tomorrow. Otherwise, I'll see you on Traveling with Bruce at 7 o'clock or 8 o'clock, depending on whether you're a sponsor member or not. And you guys take care in the meantime, okay? Thank you so much, everyone. Good morning from Australia. Take care, everybody. Thanks, Bruce. Hi, Jennifer from Sydney. Jennifer says hi to you, Cindy. Thanks, guys. We'll see you a little later. Have a good one. Bye for now.